Bam. What's up, people on YouTube? Hope you guys are having a great day today. Well, this is what I try to do on this channel. I try to break down on how to trade these volatile low cap stocks that are generally under $4, $3 a share. And it's really good for, our small accounts that are under $1,000 and trying to build an account or just trying to learn how stocks move and trade. And that's what we're pretty much doing today. We got Rita here, and she's been in the chat that I have, the Discord chat, and we've been trading stocks here together pretty recently, and she's just really trying to get a better grasp on what's going on here. And I understand, Rita, that you wanted to learn more about the candlesticks.
Yeah, I'd like to see what the deal is with the candlesticks, the main body, and then they've got those little wicks coming out of them. I'd like to learn more about what that's all about and how that can help me be a better trader.
All right, here we go. So I know first you've been watching how I take screenshots and stuff, and I actually use the different type of candlesticks. I use the Heiken Ashi candlesticks, and it just makes it a little bit more smoother. It lets me know which way the stock is trending, as you can see here. Oops, let me actually put it regular wise so you can see a little better. Oops. Alright, that looks a little better because when it was going down, it was showing green. So when it's going down, it's showing red here, and just zooming into a candlestick here, the bottom of a candlestick, when it's red, is showing where the price closed at, and then the top of the candlestick is showing where it opened at. Now, it's different for on a green candle. You can see here, the bottom of the candlestick is where the price opened at. So this is 9:57 candle right here. You can see at the bottom the time. Then at 9:58, price opened up at 21 cents and 80, 0.2180, and then it went up to 0.225, and then it came back down, and this is where price closed at. Then it moves to the next candle. Price opens up here, goes up, closes, and moves on to the next candle. Now, because there's a little gap here, that's because there's a lot of computer trading going on. There's people entering their orders in right in this millisecond. So you're going to get a little discrepancy here. It's not going to be a perfect connect to a close, connect to the open, connect to a close, connect to open. It's going to be some gap in between. And that's the basic of candlesticks. So pretty much candlestick is showing you where the price opened at and where it closed at.
For a time frame, right? And in our case, we're using a minute time frame, so each of those candles is 1 minute of action, right?
Correct. Yep. Correcto. Now, let's switch it back to the regular candlesticks that most people use. And it's just a regular candle. It's actually called the Japanese candlesticks. And it shows you the Heiken Ashi, the one I use, is showing you like how it's trending. So it's going to combine these candlesticks to showing you that, hey, it's still downtrending. It's going to actually make these red here. It might make this, it'll probably keep that one green. It might keep this one red here. But it just, smooths it out a little bit. Smooths it out a little bit more. Candlesticks is going to show you the actual what happened. So it's not going to be, any showing you which way trend is going per se until you have it in a collective group like this. You're like, okay, I can see you made a little pattern here. But when you're looking at them just individually, you can't really tell if it's like really trending in a certain way or anything like that. But it does give you exact information that someone would want.
Because you mentioned one time we were looking at the same stock, and I think the RSI was looking good, pretty good. It was heading down to 30, and it looked like maybe it was moving towards support. And you said something like, "I'll feel more comfortable trading on this when I see three green candlesticks, I think you said. And I wasn't sure what you meant by that.
Oh no,
Yeah, I think.
that was before the market opened up, and I was saying, hey, if
Oh, okay.
this one stock has like a third green candle, that might be a good opportunity to jump in it because that means more people are buying and wants the price to continue up.
Yeah, an uptrend.
Yep, yep. And that's
So
just
how do you use it while when you're not in pre-market? What exactly, like, how would the process go? You want to get in on a stock, and how do you figure out, like, how do you use the candles to help you? What's the thought
okay.
process?
Okay, very much. So pretty much it comes down to, one of just watching the charts, you know, coming in every week. Not you don't necessarily have to watch the charts every day, but coming in every week and seeing how these stocks move. And pretty much your brain gets used to seeing how these stocks move. So you can see here that there was a lot of volume coming in straight off the jump. And what I like to do is I like to wait after this first candle goes by and see what these next two candles are going to do. The second or this third one is going to be green. It's more likely that the streak is going to keep going up. See, this one, it took a little bit longer and they wanted some more confirmation. It looked like they tested the support area here and then continued up. And it's just so tricky. That's what's so tricky about the stock market. It's just like, oh, which way are other people thinking? It's not about what you're thinking about. It's like, what are other people seeing? And is this a good buying opportunity to other people? Because that's what you're relying on. As soon as you get into a trade, you're relying on other people to make the price go up. So candlestick, pretty much we're using the candlestick along with volume, especially with these morning trades. Like if you go to, what was a good one? I think it was ASA. I can't remember what we was trading on Friday. It was a good one though. Let's look at CI. CI here. I wanted a really good one that shows momentum. I can't get one right now off the top of my head, but
Was it Ray? Was it APOP? APOP?
yeah, that was a good one. APOP. That was, I think I was on Thursday was a good day. I could play it back. Oh, right there. Right there. Here you go. Clear out this stuff. All right, so you can see here, APOP got a lot of volume right here. You can see we got the second green candle here. We got some good amount of volume, about 300,000 shares, which is 100,000 shares more than the first candle, right? And you pretty much would have to have this like on your watch list in the morning. You have to like have some type of news going on. It's just, a stock that would have to be on your watch list before the market opened up. So this has nothing to do. I mean, the scanners could give you the stock in the morning, right? So from the videos of the scanner section I have, it shows you how to get these scanners up, and I like to use the scanner lows, and that shows me which stocks are going to be moving in the morning. Right now, it's not going to show it right, but it shows me what stocks are moving in the morning because it goes off of percentage. If a stock moves a certain percentage, it's going to pop up here on my scanner and I could check it out, I could check out the news, and then eventually make it a stock that I'm going to want to trade on the first 30 minutes of the market being open. So, it's APOP. So APOP here, this is what we're looking for. You're looking for more buyers than sellers here, and it's kind of hard to do it, in the moment, but it's this is where the gambling aspect comes into it. You just got to take a shot. When you're seeing the stocks on your watch list, it's got a lot of volume, it's uptrending. Let's take a shot and ride it out to get a nice good percentage gain out of it. Bam, sell here at 21% as the stock is coming down from the RSI. And it's mostly you get, from what I'm understanding, because I listen to like quite a bit of psychology on trading, It's just getting in there, getting that experience, and then you yourself getting used to all this different type of price action, right? Because never some days when we're watching stocks, the prices will jump, 20 cents, in 2 seconds and stuff, and jumping up and down in the beginning of the minute. It may look crazy for us, but other people love it, because all their focus is on is the indicators. So it's a non-event to them. So it really comes down to your personality, getting used to what type of plays you like, right? We tend to look for support areas. It's like an SPA. Oops, take this off. We tend to look for like support areas using the pre-market and stuff. And
Sometimes I don't understand the support. I don't know if it's because you're seeing things more detail or than I am. Because sometimes you say it, I'm like, oh, I don't see it. you know.
okay, okay, yeah. It kind of. Let me see. I'll start doing screenshots in the morning when I'm looking at the stocks, and then we'll see how it plays out from the lines that I'm making, throughout the day.
Yeah, because sometimes they're like going up so fast. It's like, well, I don't see the support. I just see really fast movement going up, which is fine. That's fine. I mean, that's where the money is. There's nothing wrong with that, you know.
Right.
But it's hard to see where the support is really, unless we just missed. Maybe by the time it's at that point, we've missed the support. I don't know. I'm really not sure.
Well, it depends too, like what time of the day it is. If it's the first 5 minutes, then it's like there's really like no rules. It's like at any point in time, somebody could just come in there and slam the price down, and you're just taking a shot. You're saying, all right, this is meeting my criteria. I gained some volume. It's going green. Let me take a shot, and then you have to go from there. Especially the first 5 minutes of the market being open. So
Okay, so so to some extent, your indicators don't even matter that much at that point, which makes sense.
right,
It's because it's not. It's irrational exuberance is what's going on right there. So it doesn't. I think it defies logic, and so all the RSI and everything at that point, at that
correct,
moment, that 2 minutes or whatever it is, it's probably not relevant.
correct, and the indicators go off of past information. It's not really telling you the future. It's just telling you what happens in
Yeah,
the past. So if you're trying to
yeah,
make
and they're not. Yeah, they're not predicting that sudden news article that just came up and said that they've got the latest vaccine or whatever. They're not. That's not taken into account in the indicators. The indicators don't know that. In other words.
exactly right. Exactly right. That's the confusing thing and about it, and it's also, it's like figuring out a puzzle. That's where I hear in a lot of people try to make sense of stock trading. It's just like figuring out a puzzle. Main thing is figuring out when not to trade. It's not really so much knowing when to trade, but figuring out when not to trade. Like,
Mm.
like this, we're trying to figure out when to get in on this beginning movement, and we could have just waited here till we got some clues like, hey, this price is holding up at 106. Let's try it as soon as this RSI bounces out from the mid, the bottom, and try it out. But it's just like, dang, so hard. Like, how are we supposed to know to just wait for this opportunity?
Yeah, you can't know.
Yeah.
That's why you only win hopefully 2 out of 3. You win, and then 1 out of 3 you don't. And so that's part of the game. As long as hopefully winning more than you're losing. I don't know if I'm using the right term, winning, but you know what I mean.
Yeah,
As
yeah,
long as you're correct, as long as you're correct 2 out of 3 times, that's how you make the profit. So, but yeah, you can. If it was easy, if it was really cut and dry, then everybody would be doing it. And everybody would be a multimillionaire. But it's not really that.
exactly.
It's not really that way. I get that.
Definitely not. I definitely had some different type of expectations going into this when I first started. I was like, all right, I'm gonna handle this just like any other job and just keep pounding away at it. But no, no, it's definitely comes down to planning, comes down to what you're doing wrong and doing some homework. Doing some homework, looking at your past trades, like, hey, okay, I got in on this dip here. Let's say I got in on this dip here and did that, but how come I didn't get on this dip here and do that? It's
Yeah.
crazy world, crazy world. And
Well, yeah, because then if you see like, oh, this thing had a lot of momentum, and maybe I could have taken a chance on this one, like that, right? Is that
yeah,
is that valid? Is that valid? Like, it's 6:30 in the morning, and you already see this one is looking pretty good. You take a chance, and you have your stop. You have your stop in place. But maybe sometimes you don't take a chance because you don't want to lose. So that's like you have to examine all that too, right?
yeah, yeah. And you don't want that to hold you back either, but at the same time, you don't want to keep jumping in to these bad trades.
Yeah.
So, one quick thing I'll jump into trying to identify support using the aftermarket and pre-market data. You can see here, looking back in hindsight though, but you can see here that ECOR had some price action. So when it first started going up, it took a rest here, and then it started jumping up here. So right here at 108, 107, it made a little, it made a connection here. And you,
Yeah, that one you can see support.
yeah, but
That one you can see support pretty well.
it's tricky though, because usually you want a better confirmation that you usually want to see price touching it a couple times. So it's just wow, that one's pretty tricky, but it gave you all the clues in the world right here. Once the price started going, it's like, hey, I don't want to go down. I don't want to go down, and that's what I'm really gonna start focusing on. Start focused on support and resistance. Buying resistance is where price doesn't want to go higher anymore. Right here, and just focus on that. Focus on waiting on getting some clues, using the RSI, and trade it that way.
Okay, sounds good.
All right, so let me go into the scanners here using TD Ameritrade. Got the scan button right here, and this is where you do all your scanning settings and then you save it. So over here is where it says show actions menu. Pretty sure. Nope. Where's my scanners? Okay. Yep. Load scan query. These are where most of these scanners are presets from TD Ameritrade, but the ones I have is Lowe's and then the Bull 3 candle. You can see here, let's go into Lowe's. This is the criteria of the scanner. So the scanner says I'm looking at stocks who had the last price of anywhere between 40 cents and $5. So anywhere between 40 cents, minimum of 40 cents to $5. And then the volume is looking for 200,000 shares of volume being traded within, it doesn't really matter. Like, it's like within like 10-minute ranges or something like that. Not exactly sure, but pretty sure. And then I just leave the max at unlimited. I don't want it to cut off if it's getting a lot of volume. The more volume, the better. And then it also goes off of percentage change. So say the stock went down 5%, it's going to let me know that also to let me know if there's a dip buy opportunity or but mostly I don't really think it uses this percentage change too much. It usually just uses these two right here, and that's how I get most of my stocks for the morning. It gives me this nice list, shows me what stocks are moving, usually has some good pre-market activity, and based off the pre-market activity and the news, I can generally pick out some good stocks that are going to be moving for today.
Sounds good. Okay, gonna get that set up.
There we go. There we go. Yeah, once you get it set up, uh, you can probably look back on this video or the videos on the courses to get the criteria set in, and you just click over here, go to Save Scan Query, put in the name that you want for the scanner, click Save, and then you should have it over here. It should have like watch list over here, but you click on this one, and this should be where your scanners are at. You can go to Personal, and then you should have your scanner over here. Should be over here on this list. And that's how you get it every morning.
Can't wait. Okay.
Yeah.
Well, thank you, Bray.
No problemo, no problemo. You know, it's really fun. You know, got someone in there trading with me, even though I'm in the trading group. You know, it's uh, they got other stuff going on. You know, they do other stuff other than just trading. So it's still
They
kind of
do? What do they do?
yeah, yeah.
What are
Even
they doing?
most of them are still like doing like one of them owns a restaurant, another one works for like egg farm and stuff. They do like pretty random stuff, and
Oh,
they're just using the stock trading as a retirement account. So
awesome.
yeah, so some of them are definitely trying to make this full time, and they're making $2,000 a day and stuff. So they're definitely aiming.
Damn.
Yeah, they're definitely aiming towards that goal. And yeah, I'm just trying to follow in their footsteps.
Awesome. Yeah, for sure. For sure. All right. Well, I will see you in the morning or whatever. Not see you, but, communicate with you in the morning.
Yes, yes, always fun. All right, I'll be ready.
Thanks, Bray. Talk to you soon.
All right, see you later. See you tomorrow. Bye.
Bye bye.